Hi traders, Richard here from Hola Prime, and in this video I'm going to be going through a very common chart pattern called the flag pattern. I'm going to be showing what the pattern looks like in both bullish and bearish conditions, and also talk a little bit about how traders commonly approach this pattern when they trade it. There's both either a aggressive stance that you can take that you want if you want to trade it, or you can have a more conservative stance when you want to trade it. Right, so I'm going to be showing you both those on live charts as well. And there are a little bit of pros and cons for both the aggressive or the more conservative entry methods. But in any case, before we do get that to that phase, let's first look at what a bullish flag pattern looks like. Simply put, a flag pattern is basically a trend continuation pattern. Right, generally you'll have, in this case, let's say a bullish move to the upside, a nice strong move to the upside, and then you'll have a counter corrective phase, right, that goes against the actual trend, and then at some stage that corrective phase ends, and then you'll have a strong breakout back to the upside. Therefore, it's called a strong or continuation pattern. Now, the reason why it's called a flag is, simply put, that the corrective side of the pattern that goes against the main trend represents that of a flag, and it typically forms in a nice sort of a channel opposite to the trend. In this case, downwards against the uptrend that's already been intact. And then we also have a pole side of the actual flag, right? So we got a pole, and then the corrective structure is called a flag. Right, so that's where it gets its name from. Nice and simple, a flag pattern, in this case, a bullish flag pattern. All right, on the bearish side of things will just look a little bit opposite, right? So you'll have an established downtrend, generally a strong move into a low, and then you'll have a corrective structure that moves upwards, sort of like a zigzag fashion. Similar to the bullish one, but obviously just opposite direction. Price then at some stage find resistance, the pattern ends, and you get a trend continuation to the downside. Again, same thing here. You're basically just dealing with a flag side, which is the actual corrective structure that quite often traces out beautifully within a channel. And this represents the flags part of it. And then you'll also have the pole, which is that strong trending structure right into where the actual correction started from. Again, in this case, inverted flag pattern, also a trend continuation pattern. All right, let's jump right into some live examples here. And this time I'm showing you this pattern on the NASDAQ 100. Could be on Forex, could be on any market that you basically follow, and on any time frame. We're sitting here with a really nice example. Hopefully you can visually see that already before I trace it out. But here we have a bullish flag pattern, which is, again, it's a trend continuation pattern after a very strong trend. You get your corrective structure to the downside and the continuation back upwards. Now, on this day, we actually sat with a nice big gap to the upside, which actually reinforced the idea. If you were to trade this flag pattern, again, I'll look at both aggressive and more conservative entry methods in just a while. But this basically just showed that the price was really, really strong to the upside and that this trend was likely to continue. Right, so here we're actually sitting with the pole side during that gap that also occurred there, and then also the flag side, right, which is this movement to the downside over here. Right, price then ends and it continues to the upside. Now, again, it's probably beneficial to go and mark out both the flag side and the pole side of things, and I'll show you exactly why I say that in just a sec. But in any case, you can also see here that the price pretty much almost perfectly traced out within a channel. All right, so price moved lower, 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 eventually ended, came to an end, and then we had a continuation back to the upside. The one tip I want to give you here before we talk about entry methods, the aggressive or the more conservative entry methods, is that typically you don't want to see the actual flag part retrace more than 50%. This is just a rule of thumb, more than 50% of the actual pole part of the structure. The reason being that if it does decline more than 50%, then you're probably likely not going to deal with a very strong breakout, or potentially not even a flag and a pole or flag pattern formation at all. So to show you that, let's just quickly get the fib retracement tool out here. And you could probably have used this as your starting point for the pole. So there's a bit of subjectivity there, but let's just use this for explanation purposes. Now, if I run a fib retracement tool from the start of where this pole started from to the end of it, then you can see that price didn't even reach the 0.382 fib retracement level. Again, you don't really want to see price decline more than your 50%. It's fine if it wicks through it, but once you start seeing price getting to 0.618, then your breakout's potentially not going to be aggressive, or potentially not even get a breakout at all. So this is what a bullish flag pattern looks like. Again, a trend continuation pattern, basically a pattern that moves against the current trend on the upside. And here we had a very nice strong breakout and continuation upwards. Now let's quickly talk about entry methods here. Again, I mentioned that we'll be talking about aggressive as well as conservative entry methods. So the aggressive one to start off with is that traders will try to actually get in around the end of the correction. Right, so typically you want to see during a flag pattern at least 2 or 3 touches of the upper and the lower side of these trend lines. But there might be actual cases where prices continuously goes up and down, zig and zag. So it can be quite difficult to spot where, or trying to figure out where this pattern might end. That being said, if you could, for example, have waited for price to move up a little bit like it did over here after touching that lower trend line for the second time, and you got it, and you would have actually maximized your profit potential by just a little bit. All right. So obviously getting in as low as possible, and then, trying to trade to the upside, it will maximize your profit potential. Right. The con with that, though, however, is that, you might be wrong. Price moves lower, and then at some later stage, you get stopped out. And then at a later stage, you get a breakout. Right. So that is the pros and cons of the aggressive method. Now, the actual more conservative way that traders actually trade this pattern is that they first wait for a breakout. In this case, with a bullish trend continuation flag, they want to see a breakout of the upper channel line. In this case, like which happened here on this candle over here. They'll then wait for a retest of that channel line, or just enter. As soon as you get a breakout, you just enter, and they target either the high or, some higher targets with the proper risk-reward ratio. The conservative entry, which this is, if you had to wait for a pullback, like some traders do, they want to see a retest, so a breakout and a retest. The problem with that is sometimes the breakout could be so strong that you don't get a retest, all right? And prices continues high, and you might just miss out on the trade altogether. All right, so these are just a few pros and cons with both the aggressive and as well as the conservative entry methods that you'll need to consider when you want to next time trade this pattern. Now, another thing with regards to target placement is quite often traders will then double up, or let's say copy and paste the actual, let me just get that pole part, or measure the length of that pole part, and then place that by not the breakout point, but let's say at the area where this correction actually ended. Now, whether you took aggressive or a conservative entry, and then target a one-to-one move or the same range as the actual pole. Right? It might get there, might not get there. In this case, it was quite a substantial move to the upside. Now, stop loss placements, if you were to use the conservative way, wait for price to break out, and your stop loss can go just below where the actual pattern ended. With the aggressive guys, you'll have to decide, obviously, where you want to place it, because you're trying to sort of figure out or judge where the corrective pattern might end. All right, so you might have to put it a little bit further away, maybe use something like a average true range, double the average true range or something like that. Right, so that's the bullish trend continuation flag pattern. Next, we're going to look at a bearish example. All right, next up, we got a bearish flag pattern. Again, a trend continuation pattern. In this case, there's one clear one over here where price actually declined. This was actually after that bullish flag pattern I shown you earlier. Price started moving lower. We had a bit of a consolidation moving upwards against the downtrend, and then a continuation back lower again. Okay, so we have to mark that out. We can use that high, and this low is the actual pole part of the pattern. And for the flag part, you'll see that you got a pretty decent sort of channel there where price bumped up and down, came towards a area where it ended, and then we had a continuation lower. Now, what's really nice here with this one is that we have a beautiful example of the conservative entry method would have worked. So price ended, it actually broke out of it over here, and then pulled back towards the lower trend line, and then price continued back downwards again. All right, same thing here. To measure whether you're going to get a proper decent decline or an incline, depending on whether you're dealing with a bullish or bearish flag, you don't want to see that actual corrective structure retrace, like I mentioned, around about not more than 50%. Okay, so if we had to go from that high to this low of the actual flag part, you see price just hit that 50%, and price, things ended there, or the correct pattern ended there, sorry, and we had a continuation lower again. Right, so that's pretty much it for the flag pattern. Both bullish or bearish flag patterns. Again, just a quick recap, they are trend continuation patterns. So after a very strong move, which is actually your pole part, and you get a corrective structure that traces out nicely within a channel, then you can expect that trend will initially or eventually continue right afterwards in the direction of which your pole's sloping in, whether that be bullish or bearish. Right, so hopefully that helped you out. Take these tips and tricks to heart, and hopefully the next time you spot it will help you to trade it properly, either whether you're using a aggressive or a more conservative entry method.
Hola Prime, trade with transparency.